everyone, welcome to our weekly tax saving tip. I am your favorite tax planner, Shirley Liu. I am one of the 800 certified tax planner in the United States, and my firm Freedom Folio specializes in working with real estate professionals, investors, and small business owners. So far, we've saved our clients $2 million in federal taxes and counting. So today I want to talk to you about one of my favorite strategies, which is making your kids work for you in your business. So let me explain why this is actually beneficial to you. So let's say that you own a small business and then you're on a Schedule C, pardon my ugly writing, and then or you have a partnership with your spouse, and then you make about $120K a year in net income, right? And then that means your tax rate, including self-employment tax, is probably around 38%. And you have 3 lovely children, age 9, and then age 11, and then age 13. So some people may stop me right here and ask, is this even legal, right, to hire your kids this young? And guess what? The IRS tax court has a precedent. A 7-year-old was working for his or her parents' business, and then I think this came into the attention of the IRS tax court, and then the court made a decision to allow that, as long as the children is not working in a dangerous environment, and then they're doing things that I guess that they are able to do at their age. So the youngest you can hire your kids for, which is allowed by the IRS, is 7-year-old. And then as far as the labor department is concerned, hey, it's your kids. As long as you're not, again, exposing them to dangerous environment, you can work them as many hours as you want. So in our example, let's say you pay each kid $12,000 each, right? So that means you pay in total $36,000 in wage. And because you are Schedule C and partnership, you are exempt from FICA taxes. So there's no payroll tax when you do their payroll. And then for the $36K that you paid out, you are getting a direct write-off from your business. And what does that mean in tax saving? That translates into about $13,727 in tax saving. And what does that look on the kids side? Because now the children have to file their own tax return because they make $12K a year. And then so when your 9-year-old files for his or her individual tax return, guess what? They get that standardized deduction of exactly $12,000, which means your 9-year-old does not even have any taxable income at all. The taxable income is zero. So you essentially got $13,727 back from the government by simply hiring your kids. Now, some people may ask, what if I don't have a partnership or Schedule C? I have an S Corp. Now, unfortunately for S Corp owners, you do not get that payroll tax exemption anymore. So you may have to still pay a little bit payroll tax on your kids' payroll, but you still in the end save about $7,276 in tax by paying your kids a salary and making them work in your business. Now, you want to make sure that you document very carefully how many hours they worked and on which date, and then the exact description of the job they performed. And you want to make sure that you pay market rate for what they did. So for example, if you have your 9-year-old working in your business, you don't want to pay them $65 an hour, because that's just not a reasonable hourly rate for a 9-year-old, right? So maybe you pay them something like $12, $15. I think that's all reasonable depending on the task, the complexity of the task. And a 9-year-old, I really don't expect them to do anything complicated. But yeah, as long as it's the market rate, you get that deduction, no question asked. Now, what's even more powerful is we always recommend our client to open up a Roth account, Roth IRA account, because having that Roth IRA, sure, it's not tax deductible, but at this age, they don't even need that tax deduction. At $12K a year salary, they do not need that tax deduction at all. And then by having that Roth, it really gives them a lot of freedom, when they go to college. And then also Roth IRA does not expose them to the ugly kitty tax. And then, so can you imagine if you have your kid open up a Roth IRA at 7-year-old? I did the math right here. If you contribute $5,000 every year by the time they retire, let's say 65, that would be $3.5 million. But let's say if your kid started the Roth at 18 when they first get a part-time job somewhere else, maybe like McDonald's or Starbucks, then that Roth balance cuts into half. So this is the powerful part of having your kids working for you, and because you get tax write-off and you get the tax saving, and then your kids also get to open up, now they have the earned income, they can open up a Roth IRA.